back. You're watching The Money Show, and this is our Senior Citizen Special. That's right, we'll be answering all your portfolio-related questions, and I'm joined by Aditya Shah. Aditya, hi, good evening. Welcome to the show. Let's take Mr. Ranganatha's question first. He says he's invested in some mutual fund some time back, but he's lost track due to health issues. Now he wants some money and an update of his investment. He is a senior citizen, and he wants to apply for redemption and is not aware of his mutual funds or where he's invested. He wants to know a way out, if through PAN or email ID he can get these information or maybe get the investments tracked.
So today, mutual fund investments are extremely transparent. With respect to your PAN, you can go to CDSL or NSDL. They provided a consolidated account statement, which is picked up by your PAN number. That is one of the ways to get whatever investments are there in your name. Second, you can go to any of the CAMS offices. CAMS offices are scattered across India, across cities. You can locate a branch that is nearby your house, and basis your PAN number, you can go and get your get the statement of your whatever investments are there in your PAN number. If you have done a physical investment, then you will have to go to a CAMS or a Carvi office to get those redeemed. If you have done investments online, then you can go either on CAMS website or individual mutual fund websites where you can go for redemptions. Mutual funds are extremely helpful. You can also approach the customer care of these mutual funds to get your folio redeemed.
So get the details by using your PAN from CDSL, consolidated accounts. You can also gather investment information from CAMS office, generate a consolidated account statement using PAN, and you can get access to your holdings through CDSL or CAMS. That's the way out for you, Mr. Ranganatha. Any other way, any special service that he can maybe try approaching, any government-aligned line? Aditya?
So CDSL, I think that
Okay.
is the CDSL or NSDL is the quickest way to do it. What happens is he can just go on their website, put in his email ID, and within 10 to 15 minutes, his entire portfolio, wherever it may be in mutual funds, it may be in shares, it may be in dematerialized debentures or debt products. All of them get sent to him within 10 to 15 minutes. It's a brilliant consolidation of your investments through your PAN number, and people should use it more and more. CDS and NSDL send this every month to investors. If you have transacted, even if you have not transacted, every 2 to 3 months you get these statements. These statements are really very good in order to track what is happening, and also in this statement you get month by month changes in your investment, which is also really very good.
Perfect. Okay, all the best, Mr. Ranganatha. Let's take Mr. Hari's question, and he's there on the phone line with us. Hi, good evening, sir. How are you?
Yeah, good evening. I'm doing fine. How about you?
I'm doing good, thank you. You can ask your question. Aditya, our expert on the show, can hear you.
Yeah, I think I shared my Demat account and this thing. So, of course, I just noticed that I almost crossed 100 share stocks in my portfolio. And I'm 67 now. Started investing from the age of maybe around 30.
Wow.
So, just wondering, how do we, because I'm in the retired life now.
Okay.
How do I?
Okay. So you're looking at safe but growth-oriented investment opportunities?
Yes.
Perfect. Any specific requirement you have with this corpus that you have accumulated?
Actually, to be very frank, last year we did our daughter's marriage, so this savings have saved us a lot.
So this is not a portfolio that you need regular income from. This can stay invested.
It can stay invested because my wife is a retired government railway employee, so we get some pension.
Okay.
So I'm also working as a consultant now, so
lovely.
there is income now.
Lovely. Second innings. Way to go. Okay, Aditya, what's going to be your advice, and what would you recommend?
So having looked at this portfolio, I find a lot of sectoral funds, small cap funds as well, and business cycle funds as well. Even though this corpus can remain invested at the age of 67, 68, to invest in a small cap fund is not a very prudent thing to do. From my perspective, he needs to get out of sectoral funds, small cap funds, and business cycle funds. These are all calls where you have to remain invested for a longer period of time, and the risk in all of these funds are extremely high. So, from my perspective, I did not have the information before this that he can remain invested. What I will suggest to the investor is a mix of a flexi cap fund together with a little bit of investment in a mid cap fund would be okay. So a HDFC flexi cap fund or an Parag Parikh flexi cap fund would be okay. You can also go to a Kotak mid cap fund or an HDFC mid cap fund. However, you must control risk inside your portfolio. Large cap side of the market should dominate your portfolio. Even though this corpus can remain invested, you may require this at any point in time. So from my perspective, rather than going into the risky sectors of the market, you have to go into steady sectors of the market, which could be the large cap side or the flexi cap side of the market.
Right, so you should have your corpus in aggressive funds, and maybe the large cap exposure should increase. I hope that really sorts you out and your portfolio, Mr. Hari. And with that, it's time up on the show as well. Thank you so much, Aditya, for taking your time out and helping our viewers today. And with that, I'm going to leave you all with our WhatsApp number and email ID. Do send your questions on our Senior Citizen Special show. Every Tuesday, we get this show for you, and you can have your queries answered live.